So here's the thing, you've been trading for a while, you know that the crypto bull market is coming up, but you still can't hit a level of predictable profits when trading crypto. And look, I've been there. At one point, I was so close to giving up on trading crypto, but it just took a couple of tidbits, a couple of hints and tips before I was able to really shape my profitable crypto trading strategy. And now I've made it well over 7 figures trading the crypto chart. So in this video, I'm going to walk through some pivotal key lessons and learnings that took me over 12 years, but hopefully you guys will get it in less than 12 minutes through watching this video. So make sure you stay tuned to the very end. I'm going to walk through my top 5 trading rules that will allow you to become profitable this year. Yes, no more trial and error, no more guessing. You're going to hit the ground running once you walk through this tip. I'm going to start off with the first and clearly obvious plan, but it's not so obvious, is it? And oftentimes when I started trading crypto, this is one of the biggest mistakes I would make. And it wasn't that I was sitting there consciously making the decision. It was the opposite. It was that I was not sitting there and consciously making a plan. I would trick my own brain into thinking I was trading a plan, but I wasn't actually trading a plan. And probably a lot of you here will be resonating to this. So what is a real clear trading strategy? Because some of you watching this may go, yeah, but I always trade a plan. I trade the breakout of a descending channel and I know that I'm going to take the breakout. That's a good start, but that's not a trading plan. A trading plan requires all 3 points you're seeing there. First and foremost, what is the plan and rationale? Am I a breakout trader? Do I wait for head and shoulders patterns? Do I like taking symmetrical triangle breakouts? Do I like taking channel breakouts? Do I wait for something else? What is your strategy, right? Because the reality is, you can't be a master of everything. And for those of you trading inside our group, you will know that I have a certain set of specific strategies which I always use when I'm trading altcoins. And I stick to that because I've perfected that approach. And there'll be other really successful traders who have a different strategy, right? Now, once you've decided what that strategy is, you need to have a time frame. Right? It also does not make sense, and this is one of those mistakes I used to make all the time and would be tearing my hair out, was on a Monday, I would be like trading on the hourly time frame, and then on the Tuesday, I thought I was some scalper trading on a 5-minute time frame or a 1-minute time frame, and then the next week, I'm holding a long trade for like a couple of weeks. I don't know what I'm doing with it, right? You need to have a preferred time frame. Like right now, in my current setup in life, I like swing trading, right? I like using 4-hourly candlesticks, and that gives me plenty of time to enter my trades, plenty of time to get out, and that's my preferred time to trade. Now, for many other people, they like to scalp. They like to sit in front of the charts for a really intense period of 30 minutes to 40 minutes, trade the 1-minute chart, and then they're done for the day. You need to come up with your strategy. What patterns are you trading, and what time frame are you using? And once you've nailed that, you need to pick what is your asset class, right? Because now you know what time frame you want, you know what type of trade you want to take, but on what asset class? And it's not okay just to say crypto. There's a big difference between trading Bitcoin and trading a really small low cap coin with no liquidity, right? And each of them will have their pros and cons. Bitcoin's going to give you more liquidity and stability in terms of the price action, but you're not going to get crazy moves on the spot market, right? You're not going to get crazy 10% moves on a day, very rarely on an average day on Bitcoin. Whereas in altcoins, that could be the norm. You could easily find 10 to 15, 20% spot on altcoins during a single day. So you need to make a decision on where are you operating and what type of tokens you want to trade. This all has to be written down, right? This is your plan. And anytime you step out of the plan, you need to understand that now you're no longer trading your plan. And this is where I would always trick myself, right? I'll be like, no, I'm trading a plan. But the reality was I was changing my time frame. One day I was trading a certain type of pattern and the next I was doing something completely different. There was no real strategy, right? If I was either pattern trading or I'm using moving averages, which one am I using to enter my trades, right? I need to have one clear pattern. And that was one of the clear mistakes I would make and one of the fundamental reasons why I wasn't profitable earlier. So get yourself a plan written down. And then you start walking into the next bit, which is setting key levels. And you can almost tie this in with your plan, but so many times I would mess this up, right? It's so obvious. Every single person watching this has heard, set your profit, set your stop losses, make sure you stick to them. But how many of you actually do? Right? I know this. So many times I've entered a trade, I've had a stop loss and I've moved the stop loss and you know it's wrong. but you do it. And this is going to tie in one of the points I come on to later, but you still do it. You have a take profit, but the price is pumping so much, and you can see the price action, you see the volume, you see the ticker, you're like, oh, it's going to go up more, and you move your take profit a bit more, and you move it a bit more, and you add some more funds into that trade because it's looking so good, and then boom, it collapses, and you're like, ah. And then you do the worst thing. Oh, I know what you do because I've done it too. You go, oh, it's okay. I'm going to hold it as part of my long-term portfolio. Like, guys, come on. I've been there. I know the exact tricks you're playing with your own psychology, and we need to stop doing this. If you want to be profitable in trading, you've got to be able to separate your investment portfolio from your trading portfolio. If you take an L, you take an L. It's okay. Place the trade and brace. Place and brace. Set the trade, set your stop loss, set your take profit, and just brace. Go for a walk, forget about it, and just live your life. If it hits a stop loss, no problem. I'm going to come on to why that really doesn't matter in the great scheme of things. But I can tell an amateur trader straight away because I was there. I was exactly that same person, struggling to hit profitability because anytime a stop loss will be close, I'll just move it a little bit lower. It's okay, no, it's going to bounce, right? Or I'd stop myself out earlier. I'd see the price start falling from the area I started buying it, and I panic and I sell. Oh, I don't want to take another L, right? We've got to stop doing this. We've got to set our key levels. We've got to place. We've got to brace. We've got to keep things moving. All right, so what's rule number 3? The biggest one, I would say. If I was to pick one thing, which if I could just download from my brain and put into all of your brains right now in terms of becoming a profitable trader, it would be this piece, the risk manager piece. A successful, profitable trader is a risk manager. It's not a speculator, it's not a high gambler, it's none of the things that you think based on social media. It's just that we can stack risk in our favor. What do I mean by that? I mean, you need a sound understanding of the risk to reward ratio. What is this? This is the first time you're hearing this, guys? Well, the risk-reward ratio is what happens if you win a trade. If the trade plays out in the way you expected and hit your take-profit targets, what gain would you have made? And then what's your risk? If it didn't go to plan and it hit your stop loss, how much would you lose? Now, the very least ratio I like to trade with is a 2-to-1 ratio. In other words, if I'm not able to make twice the gain that I was potentially risking, i.e. the distance between where I'm buying and the stop loss versus where I'm buying in the take profit, that has to be 2 times bigger than I was going to lose if I hit stop loss. That allows me to have a really good risk to reward. Now, why is this important? Well, let's play this out. If I get a trade wrong, hit stop loss, right? So I'm taking 3 trades. First one hits the stop loss. Second one hits the stop loss. Third one hits my take profit. So from 3 trades, 1 has hit my take profit, 2 has hit stop loss, and yet I'm break even because my risk to reward is set at 2-to-1. So anytime I hit a stop loss, I'm making twice the amount I lose. Or if I hit a take profit, I make twice the amount I lose to the downside. So from 3 trades, I can get 1 right and still be break even. So I can have a 33% hit rate, which is quite bad, let's be honest, right? Less than average. I mean, if I just picked any altcoin with my eyes closed, probability dictates it should be 50-50, right? I'm saying you can have a 33% hit rate, a 33% hit rate, and you should still break even. So when I hear that traders are making huge losses, they're hugely down in their account, they blew up their account, I know exactly what it is straight away. I've been there, I've made the same mistakes, they've messed up their risk management. 1, unknowingly, or 2, knowingly because they were super greedy. Okay, so very important that not 1, you calculate your risk, but then make sure that your risk to reward suitably reflects that risk, right? You need to make sure your risk to reward enables you that if you take a few L's, it doesn't matter. When you get a winner, it's going to eclipse those. Right? And in my personal trading, as I became more and more experienced, of course my hit percentage is not 33%. Right? I rarely hit a stop loss. In 22 trades, let's say that I took last month, maybe 2 or 3 stop losses. Right? So if I'm hitting 18, 19 winners at 2-to-1 risk to reward, it's very difficult for me not to have a profitable month at this point. Not for me being a genius, just for me making sure my risk to management is good. When I get it wrong, I make sure I lose small. When I get it right, I make sure I win big. Simple as that. Now, that's easy said than done, but in order to be able to do everything I've just said, there's a little thing called this brain, right? There's this thing called your brain and psychology. And this is what messes up every single trader. And again, I'm speaking from experience. I've been there. I've messed it up. You've got your trading plan. You've written it down. You follow it. You find the perfect pattern. You set your stop loss. You set your take profit. And then that little bird in your ear says, you know what? Let me just FOMO in a bit more. Let me put some more money in it. Let me move my stop loss. Let me take profit before we hit that take profit level. And you start messing up and intervening with your plan. And that's when you start to mess up your profitability. So it's very important that not only do you identify when your brain is showing greed or fear, but you also then avoid those emotional decisions. You should, over time, when you trade more and more and more, understand that, okay, that's my greed talking. That's not rational me. That's not what's on my trading plan. So why am I now changing it in the heat of the moment when I'm watching the candlesticks fluctuate up and down? That's an emotional decision based on fear or greed, right? If it's not in my trading plan, it doesn't matter. I shouldn't be worried about it. Why should I care? If it hits a stop loss, let it hit a stop loss. Because again, going back to the previous slide, my risk to reward means I can hit stop loss. It's okay. It's like me being a boxer and expecting not to be punched. I just don't want to get punched too much, or at least I want to punch the opponent harder than he's punching me. Okay? So it's very important that you're able to manage that psychology. Do not intervene with your trading plan. Again, guys, I'm screaming this down the lens, but the reality is I've been there. It's not easy. And this is a dark tunnel you must navigate through. If you actually want to become a profitable trader and get all the benefits of being able to print money on the charts, have the life freedom, get out of your 9-to-5 job, become financially free, you can do it in the charts. And I've proven that through sharing every single one of my trades. Every single one of my trades is shared, and you can see every single trade I've done. Right? You can see that I've gone through that path, that pain, that difficult period of not being able to manage my psychology, intervening with my trades, going through the difficult period, trading different chart patterns all the time. I've been there, I've done it, and I've got the scars for it. And I know you guys can navigate it too, but you've got to work through it. You've got to identify when your brain is tricking you and step in at the right time and say, no, I'm going to trade my plan. It's very, very important that you do that. And last but not least, this is the one tad tip that really did help me fix that emotional element of it. And that is keeping a trading journal. I know this sounds really dorky and it's the last thing you want to do, but this really did help me. Remember, there's two alter egos you have when you're trading. You have the really smart you that sets the trading plan. That's the you before you enter the trade that says, I can see a clear descending channel here. I'm going to take it on the breakout and wait for a retest. Then I'm going to enter here. I'm going to have my stop loss here and my take profit there, right? Fine. You're in the cold day of light. You're calm. You know exactly what you're doing and nothing is going to get in your way. But then you enter the trade. Now there's real money in the trade and your brain starts to change. You become irrational. You become emotional. And in those moments, you'll do things that you wouldn't have done 10 minutes ago before you placed the trade. And so it's very important that when the trade is finished, whether you won the trade, whether you lose the trade, go to a spreadsheet, write down what happened, write down what your actions were and analyze it. And I promise you guys, you're going to see so many examples of what I just said there, which is where you do things which you just didn't realize. I intervened at this level. I moved my stop loss. I took profits too early. I didn't let it play to the take profit. I added more to the trade. Something on Twitter distracted me and I didn't see my trade. Somebody on Telegram told me that this coin is going to keep pumping, so I stayed in it. Write everything down. Be honest with yourself. Write it down. And that way, when you look at it when you're calm again, once the trade is closed, you can go, I didn't stick to my plan, did I? I didn't stick to my plan all along. So really, really important that you journal, because there's one thing that you making mistakes, that's fine. You can lose a little bit of money, that's fine. But it's only bad if you don't take the lessons from it. If you've taken the lessons from it, it's the price you pay for leveling up and becoming a good, profitable trader. And last but not least, you've got to apply these rules, right? You've got to work through these rules. You've got to apply them, but adapt them to your style. Every single trader will have their own style. Now, of course, you can join our crypto community, ijazcrypto.com/TG. And in there, you're going to see my style. You can see exactly how I trade, what time frame I like to use, which patterns I like to use, which altcoins I pick. That's fine. But it's important you adapt it to your style. Now, whilst you got the training wheels, you can use mine for inspiration, but eventually you're going to find your style. Which time frame do you like? Which chart pattern do you like have the best hit rates for you? which ones work for your mindset and your psychology. All of that you're going to learn, and you're going to adapt it to your style over time. So there you have it, guys. There is my 5 tips for you becoming a profitable crypto trader in 2024. If you find this type of video useful, smash up the likes. Do not forget to subscribe. Hope to see many of you crypto traders over in our Telegram group, ijazcrypto.com/TG. Thanks for watching, and I'll see you in the next one.